Just promise me one thing. Don't fire your accountant just because they won't let you deduct your trip to Tulum or they didn't respond to you immediately when you emailed them on April 5th. Hi, I'm Ayers, and this is Money Changes Everything. Should I fire my accountant? Key takeaways. Over the last 10 years, tax laws have undergone a lot of changes. It's worth it to pay for a professional who is up to date and can make sense of the latest changes. It's best to look for a good accountant outside of tax season because the best ones will already have their plates full by February. Paying good money for an accountant who makes tax season less miserable is money well spent and will save you money in the long run. No, you should absolutely not fire your accountant under any circumstances. Okay, maybe there are a few circumstances where it makes sense, like fraud. However, as I'll explain shortly, your accountant is a valuable person and they are likely doing a good job. So before you blame your tax troubles on your CPA, let me explain why you should probably keep them. Let's define some terms and survey the current accounting landscape. What is an accountant and why you should care? An accountant tracks, organizes, and interprets your financial life. They don't just do taxes. They help make sense of your income and expenses, especially if those things are messy, seasonal, or coming from multiple sources. That kind of ongoing support costs money. Not all accountants file taxes, and not all tax preparers are accountants, but ideally the person doing your return understands both. You need an accountant because the tax code is not intuitive. A good one helps you follow the rules and make the most of them. They spot issues early, help you plan ahead, and stop you from doing something accidentally expensive. But if you're paying less than $500 for an accountant to do your tax return, you're not getting that level of help. You're just paying for someone to put numbers in the right boxes. That part of tax return filing will be replaced by AI shortly. What an accountant actually does depends on what you hire them for. Some handle bookkeeping and payroll, some just file tax returns, some do year-round planning. Most individuals and small business owners need someone who files their returns, answers a few questions, and helps make smarter tax-aware decisions. What's a CPA? A CPA, a certified public accountant, is an accountant with a license. They've passed a brutal exam that has 4 parts, by the way, and meet continuing education requirements. Not all accountants are CPAs, and you don't necessarily need a CPA to file your tax return. But if your finances are complex, a CPA is more likely to know the edges of the law and how to stay on the right side of them. Yes, there is an accounting shortage and tax laws change. You're not imagining it. The profession is shrinking. Between 2019 and 2022, over 30,000 accountants and auditors left the field. That's a 17% drop, according to the US Bureau of Labor Statistics. The Wall Street Journal called it a brain drain of historic proportions. Fewer people are sitting for the CPA exam. Folks are retiring without succession plans or just dying at their desks. So if you found someone good or even just all right, you should hang on to them. The ones that are still standing are juggling complex rules, high demand, and more red tape every year. How much should accounting actually cost? Accounting is an expense, and it should be proportional to your needs. If you're a business owner with straightforward income and standard expenses, your monthly accounting shouldn't break the bank. A few $100s a month is typical for basic service, roughly $3,000 to $10,000 annually. You probably need a bookkeeper who is supervised by a tax accountant. The general rule of thumb is to allocate 2 to 3% of your revenue to finance. That means accounting, bookkeeping, tax prep, and strategic help. So if your revenue is $100,000, 3% is $3,000, which should cover tax return prep, but not bookkeeping. Sometimes these services are called outsourced accounting or client accounting services or a fractional CFO. This is the baseline. You're going to pay a little bit more for someone who understands your business, someone who sends monthly financials, someone who helps you understand the health of your business, and someone who makes tax season less miserable. That's money well spent and ideally returns more than it costs. If you're a W-2 employee with some investments and not a lot of complexity, you probably don't need an accountant. TurboTax or Free Tax USA will do the job. If you're an individual with some complexity, like rental properties, equity comp, or 1099 income, an accountant can be very worth it. Most capable CPAs I know charge between $1,000 and $3,000 for a basic but thorough tax return. That sounds like a lot until you realize how much bad advice or missed filings can cost you. How to find a good accountant. Start by asking people you trust, other freelancers, business owners, or anyone with a similar setup. Post in your Slack group at work or community forum. Ask who they use and what they like and don't like about them. If you're starting from scratch, use AI to speed things up. Ask ChatGPT for another tool. Find me a tax accountant for freelancers in your city or state. Give me a list of CPAs who work with equity comp and remote workers. If you want a vetted starting point, try the NATP directory. It lets you search by location, services, and credentials. Everyone listed is a member of the National Association of Tax Professionals. Once you find someone promising, check their website. Do they work with people like you? Do they talk like a human? Do they offer planning, not just filing? Then send a short, clear email and ask them for an intro call outside of tax season. You're not looking for a genius. You're looking for fit, clarity, and someone you can reach out to again next year. Good accountants are precious. If you have one, don't take them for granted. If you're looking, the most important thing to know is you need to hire them outside of tax season. By February, the good ones are all booked up and the rest are scrambling. If you want a real relationship, someone who knows your numbers, your business, your patterns, and who can give you proactive, not reactive advice, seek help way before you think you need it. Ask for referrals in the summer. Book your call in the fall. That's how grown-ups find accountants. And while we're at it, if you expect thoughtful, personalized responses within 48 hours, your tax return should cost more than a few $100s. My accountant never responds. This is the most common complaint I hear. And yes, sometimes it's a real problem. But more often, it's about mismatched urgency. Your accountant isn't ignoring you. They're triaging. They're handling filing deadlines and questions that could trigger penalties. If your email is about a deduction for next year or whether to open an LLC someday, that's not urgent. It feels urgent to you because it's on your mind, but it's not at the top of their queue and it shouldn't be. Your accountant doesn't need to get your industry. They don't need to be fluent in your business model. They already know what's deductible, what's risky, and when you're about to do something stupid because someone told you you're leaving money on the table. Yes, you can find someone who will turn a blind eye and let you write off some cockamamie bullshit that actually isn't deductible. If you have a high tolerance for risk and you have found someone who will do it, good for you. But know that while the chances of being audited are extremely low, if you do, the IRS will throw out all your bullshit expenses and you'll owe taxes plus penalties. Of course, there are times when having an accountant who's a specialist in a certain area makes sense, such as when you work in real estate, tech with equity compensation, entertainment, or any highly regulated industry like farming. There's a lot of tax law related to farming, but most people don't need someone who gets their niche. They just need someone who understands the rules and asks the right questions. Posting about your vacation does not make your trip a business expense. Your accountant is not being difficult when they say no. They're protecting you from your own optimism and the stupidity of charlatans on TikTok. How to have a good relationship with your accountant. The accountant-taxpayer relationship is broken. It's too rushed, too narrow, and often disconnected from the rest of your financial life, especially if you're a business owner or someone with RSUs, which are restricted stock units, stock options, or maybe a future exit. This is why you can't really afford to treat taxes like a once-a-year task. You need planning. You need structure. You need someone looking at the whole system: bookkeeping, investments, tax strategy, and retirement. Not in isolation, but together over the years. If you're a content creator who's about to have their best year ever, you need someone to help you optimize throughout the entire year, not after it's over. That's the kind of work we do at my firm. We built our firm for people who want to stop duct taping their finances together and start making long-term, high-impact decisions, slowly, intentionally, with support. So yeah, I can't help myself with a pitch here. Hire my firm if you're a high-earning creative or employee. We're extremely responsive. And if you're not there yet, that's fine too. Just promise me one thing. Don't fire your accountant just because they won't let you deduct your trip to Tulum or they didn't respond to you immediately when you emailed them on April 5th. How to love and keep your accountant. Every year we get emails that say, "My accountant died, can you help me?" Sadly, I'm not joking. The profession is full of solo practitioners who have built businesses around themselves. When they burn out or disappear, clients are left scrambling. Most people wait until there's a fire, a notice, or a scary bill before they look for help with their taxes. But if you wait until something breaks, then you're not choosing a good accountant, you're settling for whoever picks up the phone. A good relationship with your accountant is built on timing, trust, and clean inputs. Here's how to do it better. Treat your accountant like a collaborator. Come prepared, ask clear questions, and accept their answers. If you run a business, keep your income and expenses ledger up to date. Track your income and what you spend, and keep your books, that means QuickBooks, tidy. Be clear about how you want to work and what your expectations are. Do you want monthly check-ins? Great, that should cost money. Save up for your taxes throughout the year. Putting some money aside in a separate account that you plan to use for paying your tax bill will help you rest a little easier once tax time comes. Send your documents to your accountant early, not April 1st. The earlier you are, the better they think. If you show up in the fall instead of the spring, your accountant has space to think with you and give you actual tax-saving advice, not just react to you. You also get a better version of them. Accountants in October are humans. Accountants in April are triage specialists in the ER. Underslept, overworked, and very cranky. Be open to extensions. Filing for an extension is not a red flag. They're standard for anyone with complexity. Don't blame your tax bill on your CPA. You owe because you made money. And here's my parting shot. Accountants are probably the only person in your life willing to tell you no and mean it.